Hello everyone, Jesse Webb, TradersPro. Market conditions still bearish in a bull market. We're seeing the rank of that bull market at 13.36, which means that we're just starting to roll back down on that long-term trend, which is this number right here. And as we've been pausing and working through this counter trend, this overall uptrend is just starting to flatten and work its way back down a little bit, which is not unexpected. You get things that go to these extremes, and they just need some time to take a break. Essentially, short-term market indicators. We're seeing momentum move back the other direction now, and we were deeply oversold and starting to move this direction. This has been a good example of when things do get too far to one direction and they become extreme. They still may be trending this direction, but it's working. It may be working this way and then go back to extreme. In a downtrend, that's going to happen. You're going to see it goes too far and then it rallies back up, but ultimately it's in a downtrend. Just like in that upper range, that buy zone, when it's moving higher, you're going to get a move, down to the buy zone and then up to the extreme and then back to the buy zone and then up to the extreme. That's what we want. That's what we want to be able to go in and glance and see. So we obviously can glance and see that momentum is in that bearish trend, in the downtrend, but we're at the extreme. We're at the edge of that, and that provides some opportunity potentially, or at least some relief rally. The breadth indicator is deeply oversold here as well. So all of these things are setting up for a bounce, and we're kind of working through that. Same with the buy-sell ratio. This is actually a really nice setup right here for these to start to work themselves back together again. Okay, this has actually been a pretty long stretch of downtrend right here. And if I were to take this and move it back out, let's go to 2 years instead of 1 year. Okay, you can kind of get a little bit of idea of how 2022 was and how long some of those downtrends happened in 2022. This was probably one of the longer ones right here. This one was pretty long, not as long, but pretty deep. And so you can see in relation to the amount of time, my goodness, pardon me, to the amount of time that we've got this price pattern. Excuse me. Let me grab a drink real quick. Okay, this length of time here in this overall downtrend is also becoming extended, and we're at some of these upper ranges. So this has been a pretty interesting move lower, but we're not quite to that location where we're looking to really panic for more downside. There are lots of reasons potentially why, but that's climbing the wall of worry essentially, and we're not doing that quite yet, so we're certainly in this downtrend. But let's look at this potential bottoming location on S&P 500. I've talked about this the last couple of 3 or 4 days. 6-month time frame, connecting our swing low and our swing high. Our trending location is here, our momentum location. We want to see stocks and markets up in this location. Here we got that false signal where it rallied, immediately reversed, and away it went back down to a corrective location, which it sliced right through that. Now we're at that 50% 618 retracement. 50% retracement just means that from this location to this location, we've moved halfway back. Okay, halfway of that trend. So we're now back exactly halfway. Deeper than that is a 618, basically 62% retracement. Okay, here, that's a common range. That's a common buy zone where stocks or markets will retrace and hold that level and then reverse and continue higher. So you can see on this time frame, we've broken that level, and it's actually, so far, it's had 1, 2, 3 days. You can see those tail bars right there where it's found resistance. It rallies up and then back down, up and back down. Yesterday kind of paused right there. So we'll see what today brings, if we can bounce back up that and continue this overall momentum and have this now become a new floor instead of the ceiling, where we can take that next step up, also kind of called stair stepping, okay, where we have these lines that are drawn out. We want to stair step up and find support, resistance, stair step up, find support, okay, resistance, break through that. That's what we want to see. We've been doing the exact opposite right now. We've been breaking this line, okay, of these two lines right here. We broke through it, We retest it, we break through it, we retest it. That's kind of the very definition of a downtrend, where you're stair-stepping to the downside off of these support levels. We also have on S&P 500, we've got this on the 1-year time frame. It's that 419 number, or the 416, 419 range. This is actually set right at that 416 range here. I wouldn't be surprised, and you can see where we're getting resistance to just test that. So there could be some more weakness here in the shorter term. We'll watch to see, watch to see if that ends up happening. We're just kind of stuck right here, deeply oversold, trying to bounce. But some of these counter trending moves, these bullish moves, could just be set up for more downside. Currently, let's take a look at the sector ETFs, see if there's anything interesting there moving. We're seeing technology actually shorter term trend has moved back up. It's finding support. This is the 1-year time frame, so we're supporting at the momentum location, this 236, this upper range on the 1-year chart, finding support. That could be a good thing for stocks right here if tech can hold up at that level. Not seeing much happening here on anything else. Really, even the short-term trend has not budged on anything, so lots of work to do on the market right here. The other two real big talking points that we've been dealing with is our bonds. So TLT, if we look at TLT, we know what that trend looks like, and it's essentially in the downtrending zone, the downtrend momentum zone, where here's our trend direction, here's our momentum range, and we're just really extreme. So we could get a real hard snapback in bonds as interest rates drop. On the muscle ETFs, if we look at these, really the top three, you've got leveraged inverse ETFs. So you've got the 20-year TT. This is symbol TTT. So as bonds are dropping, as TLT drops by 1%, this goes up by 3%. So it's had a really big run right here. And one of the ways to be able to deal with and play some of these market conditions right now. Same with PFIX, also extreme. This is the actual interest rate side of things, so you can just see how extreme that is. It's just unsustainable, and at the upper edges, we'll have to see what that ends up doing here in the next few days. New buy list, RMBS is the top of the list today. Let's go back to that the 6-month time frame. Didn't quite reach to that upper level. But it has been a strong mover over the last year, 6 months or so. CWCO, this is a really nice looking pattern. You've got lots of green in here, which essentially is all of your fundamentals. Your annual EPS is up 160%, quarter over quarter up 80%, sales growth up 30% quarter over quarter. Okay, the 80% over quarter and 35% quarter over quarter, those are big numbers. That's exactly what we want to see on a stock like this. And it's in the momentum zone, found support there, and now you've got a nice looking confirmation bar, only 3%. You could set a stop at that low, or even set a stop all the way down at these levels of the stocks today. That's probably the best looking setup in that upper momentum zone. PLTR, keep an eye on this one too. This one gets talked about everywhere on YouTube. It's a really strong AI candidate. So if you're interested in AI and stocks dealing with really some cool technology in AI, PLTR is an interesting one to add to your watch list, or even start to accumulate right here, because it has corrected back to that 50% zone. Swing high, swing low, retracing halfway back to solid support. You've now got 1, 2, 3 bounces, and now it's moving higher. Again, starting to stair step back up those ladders, finding the support area, working its way back to the momentum zone, so relatively early, potentially that overall uptrend. That'll do it for today's update. Everyone have a fantastic day. If you don't have full access to the site and software, you can sign up with a link below, and we look forward to having you. Have a great day today.